Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
All right, guys, what is up? Welcome. Good morning, good evening, and good night. I'm not sure what time it is by you, wherever you're joining from. You could put it in the comments below. Let's get this thing started. So today is the 16th of August 2022. Some of you, it might be the 17th already. But what we're going to do today, we're going to do some analysis. We're going to look at some, if there are any setups for Asian, and if there are, we'll try to see if we can capture them. But I want to talk about a few things, a few things that are really interesting that I learned in the past week. Not just things that I learned, things that I've realized, things that I've come into experience with. It's really interesting, right? A lot of people don't really understand how deep psychology goes when it comes to trading. And I want to really explore some of these things today. All right? So I'm going to share my screen, but we're going to talk about these topics while I'm sharing my screen, right? And so I'm going to start the share now. And I just want you guys to let me know if you can see my screen. Just put in the chat yes or no, Y or N. If you can see my screen, just let me know quickly. While I'm waiting for you guys to tell me if you're seeing the screen, I hope that you understand that the year is coming to an end, right? We are on the 8th month of the year, right? Second half of the year has already started, well, a few months now. And things start to ramp up typically at the end of the second half of the year, and we're going into the last quarter of the year, right? Now is the time to really, dig down and try to build back. If it is you're down, if you're in a deficit, now is the time to try to build back, right? So what we're going to be doing tonight is we're going to be talking about three different things. And on top of that, we're going to be doing some analysis, right? The first thing I want to talk about is one of the reasons why I don't agree with the schooling system, right? And the schooling system, not just in the real world, but even in any external schooling system. So in any course or anything like that, right? So most people, right, when they are teaching, what they tend to do is they tend to starve creativity. How do they do this? It's very simple. Is only one right or wrong answer. Anybody ever realize that? Most people, when they're learning, they're trying to learn something, it is said that there's only one right or wrong answer, or one right answer. There's only one right answer. This starves the creativity of a student. Why do I say this? Think about it. If it is that there's only one right answer, that the learning process gets so much harder, because if you don't get this right answer, it's automatically wrong. And you tend to start to build fears based on that. So if I told you that the only thing that you could have done in this market on AUD/NZD was sell, if I told you that was the only thing you could do, you would then automatically build up the bias or build up the belief that that's all you can do, and you wouldn't ever look for anything else in this market. But that's a big problem for trading, and it's a big problem for school. You know why? Because you would quickly realize that the students who were model students, A+ students, are doctors, lawyers, and pilots. But a lot of them, and we'll come to the second topic just now, a lot of these lawyers and pilots and doctors, they still live paycheck to paycheck. Does anybody disagree with that? There's a statistic right now in the world that says that people making $200,000 a year still live paycheck to paycheck. Why? It is because of that exact thing that I'm talking about. It is because of the exact notion that there's only one right way to do things, but that's not true, right? There are people, however, who did not take that avenue, who were probably C plus students, D students, and these are the people who basically run the world now, right? I'm not saying that all D plus and C plus students run the world, but let's think and talk about the people who are actually running the world. Are not college graduates. They're not geniuses in the eye of arithmetic, and education. They're geniuses in their own field, but they didn't do what everybody else was doing. And this is why I say that school tends to starve. School, listen to what I'm saying. School and any conventional schooling tends to starve the student. With trading is the exact same thing. When a teacher in trading tells you that this is the only way that you can do it, and this is the only thing that you can do, and if it is you don't do this, you're not going to get it. You're going to get it wrong. You're going to lose. You're going to lose. You're going to lose. When you do that, you are basically destroying that student's ability to think outside of the box. You're destroying that student's ability to really try to build any kind of perspective on anything. This is why what I tell you all the time is I could be wrong. I don't ever proclaim or profess to know everything. I don't, because I know that I don't. I don't know everything. In fact, I oftentimes say that I don't know nothing. The reason why I'm telling you this is you need to be very careful when you come into contact with somebody who says they only win, they don't lose. Very important. You need to be very careful when you come into contact with people who say that there's only one way you can trade this market. You need to be very careful when people say that this is the only thing that you can do to make money. And I disagree. There are many, many, many different strategies that work. My own included, but my own is not the only one. It's by far not the best one. Stop listening to people who only want to starve your ability to learn. There are many different ways to skin the cat, as they say. There are many different ways to really approach this industry. And this is why when I am performing an analysis, I always couple it with I could be wrong. Even though I trust my system, who knows what is going to happen? Let's be real. Who knows what is actually going to happen? The instant somebody starts to think along that wavelength that they know it all and they understand exactly why the market doing what it's doing, you've already lost the game, because you're now stagnating. You're starving your own ability to keep progressing, keep learning, because you think you know it all. And in actuality, that is not possible. Agree or disagree? What do you all think? So we getting into an analysis. I promise you that. But do you agree or do you disagree with this sentiment? People who have this thought process of I know it all and there's only one way and this is the only way to do it, they are oftentimes the very same people who struggle and starve. Not starve from the by virtue of eating, but starve by virtue of progression. You understand? Do you agree or do you disagree? That's the first thing I want to talk about. It's something that I came into direct contact with over the last week, right? So that is that. The second thing that I want to talk about here is obviously with the conventional school system, when you teach everybody the same thing at the same exact time, right? Listen to what I'm saying. When you teach everybody the same thing at the same exact time, you know what happens? When you try to test everybody at the same exact time, why is it that some people pass and some people fail? They make it out to be like some people aren't good at school. In actuality, that's not the case, you know. It is that different people learn at different rates. And if different people learn at different rates, I might explain this trait to you today, right? And it might take some of you a few minutes to understand what I did. Whereas it might take some of you a few days to learn what I did. But at the end, most of you would understand. But there's a disparity in how quickly different people learn. This is why the school system today is not designed to have everybody progress and be good. It is designed to rule out the weak and build a certain person to function in today's society. What do I mean by that? When you do good in school, you do good in conventional school, where do you go? You go to conventional work and you have a normal conventional 9 to 5 and you just basically be a part of the rat race. You just basically be a part of the machine, a cog in the machine. Yeah, you're doing good in life. Yeah, fine, you're doing, but that's all you'll ever really be because you've been taught to think a certain way. Now I'm going to go into something a little deeper before we get into the analysis. And I promise you, I am doing analysis tonight. If you're leaving because I'm not doing analysis right now, you are one of the very people who I am talking about, right? I promise you I'm doing analysis. If you come here just for signals, this is why people fail in this industry. Listen to what I'm saying. The next thing that we want to talk about is deficit, break even, and surplus, right? What are these things? So let me talk about something here. We know that in conventional school of today's era, on this era of today, we know that financial literacy is not a thing. They don't teach about financial anything. They don't teach anything about finance. They'll teach you principles of business, principles of accounts, and that's it. They don't teach you about investing. They don't teach you about how to deal with actually building a business. They don't teach that. They teach you how to be a model worker. That's what they teach. Now, if you are in a position where you're making a certain amount of money, right, and the amount of money you are spending is more than the amount you make, you will be at a loss. Does everybody agree with that? That is what you explain as a loss. There's more going out than you have coming in. Everybody agree with that? That is what you would consider a loss or a deficit. Everybody agree with that? If you decide now to make more money, do you think that person would change? If they're living paycheck to paycheck, because as soon as they make money, they're spending more than they make, right? They are at a loss, they are at a deficit. If they make more money, do you think that would change? It would not change. You know why? Because they have that imprinted in their mind. That is what they learn. That is what they know, right? The same thing happens with a break even. If you have a certain amount of money coming in, and the exact amount of money you have coming in is the exact going out here at break even. This is living exactly paycheck to paycheck, right? Where exactly the amount of money you spend, you have nothing to spend extra, right? You're at break even. If you make more money, do you think that will change? No, it will not. It will not, because it's nothing to do with the amount of money you make. It is more to do with the way that you think about money. Now, with a surplus, which is where you have more money coming in than you have going out, you have money to play with. Do you think if you make more, that you would actually now begin to, make more? You would live a better life? Yes. You know why? Because you already have a habit of spending less than you make. This is a problem with a lot of traders. I see a lot of traders even do it. They are basically losing more than they make. They are losing. Remember, I told you there's a segue coming into trading. There are a lot of traders losing more than they make. This is why I believe that the way I trade with regards to my risk reward ratio is so potent. It's not the only way, but it's a potent way, right? Again, I'm not saying it's the only way, but it's a potent way. Because what I do is I'm not trying to win every single trade. All I'm trying to make sure is when I win, I'm winning significantly bigger than when I lose. I want to make sure that what is coming in is bigger than what is going out, right? That is why, regardless of if I'm in a losing streak or whatever, I can get out of it fairly quickly. A lot of people cannot do that because they are operating from the wavelength either of a losing trader or a break-even trader. Many people are losing trades significantly bigger than the amount of trades that they're winning. If you open your history now and you look at it, you would see red, 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 big red, big red, big red, big red, and then small blue, more red, 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 red. And that is why you're losing money, obviously. What about traders who are break-even? They're seeing red, blue, red, blue, red, blue, red, blue, red, blue. Yes, you're not losing money, but you're also not making money. According to what we say, you're spinning top in mud. The top isn't going anywhere. You're not going anywhere. There's not more going out than there is coming in. It's right there. You're just floating at right there, right? Where you want to be as a trader, obviously, is in a surplus position, which is where you have more money coming in than you have going out. You have bigger wins and smaller losses. Does that make sense to everybody? Beautiful segue if you ask me. This is how you make money in the industry. Make sure your losses are small and your winners are big. It's that simple. Now, obviously, to be able to do that, you need to have the correct system. You need to have the correct risk management. You need to have the correct understanding of market structure and all of these different things. That's obvious, right? Now, the interesting thing, this is the third thing I'm going to talk about before we get into the analysis. And we get into the analysis in less than 5 minutes. Is the third thing I want to talk about. And it is something from being a teacher when I am teaching students on a one-on-one basis. This is something I see all of the time. I had a class with a student earlier this week, and I decided, I was like, you know what? This is a really good lesson to teach people. The student has, I think it was 10 trades, right? 10 trades. 5 of those 10 trades, listen to me, 5, I'm not saying who the student is, you know yourself. The student has 5 of those 10 trades on the same currency pair, right? And those 5 of those 10 trades on the same currency pair are literally a few hours apart. So I asked the question, with those 5 different trades on the same currency pair, a few hours apart, did you have 5 analysis? And the answer to the question was an automatic no. Let me ask you something. How many times, if you're listening to me and you're taking me serious, how many times have you done that? You have literally taken a trade, lost it, and then not even 5 minutes later, you're in another trade. How many people have done that before? Let me know. Just be honest with me. I've done that. I used to do that shit. How many people have done that before? Be honest with me. So you're now taking a trade, losing it, and taking another. So you analyze a currency pair, take a trade, right? You lose. You did not analyze the currency pair again, and you know something? You lose. You understand? Because you did not analyze it. And here's the caveat with that. You are basically taking trades that do not have analysis coupled to them. And you know what that does? That puts you in a deficit position. You know what that means? You are taking trades that do not need to be taken. They were never meant to be taken by you. So it don't matter what you do. It don't matter what you do. You will always be in a deficit position because you're always taking trades that do not need to be taken. You see what I'm talking about? People saying they're guilty. They do that today and yesterday. Why? The question is, every single time you have a potential analysis, you don't necessarily have to have an entry. But I'll tell you this, the opposite of that statement does not hold true. Every time you have a potential entry, there must be an analysis coupled with it. Otherwise, risk being put into a deficit position without any cause. Agree or disagree? What do you think? Does anybody agree or disagree with that statement? You can have an analysis without an entry, but you cannot have an entry without analysis. Agree or disagree? Let me see who. Let's see if we have real traders in here. The reality is that's the facts. These are the facts, my friends. If you do not have an analysis, how can you have an entry? I asked this exact question with the same student. I say, could you have a child without a pregnancy? No, yes. I know the answer to that is yes. Yes. But I digress. In the way of the normal workings of the world, yes, you need to have a pregnancy to have a child. You need to, it's a process. There must be a process. Come on. So if you did not analyze the pair, and when I say analyze, I mean extensively analyze the pair. So I don't want to hear that you looking at potential, let's just say you're looking at potential sells on AD and ZD, and you're looking to sell here. And okay, you take the sell and it stops you out, right? Cool. And you come back now and you say, all right, well, clearly I was wrong about sells. So let me buy it now. That is not an analysis, eh? Let me also paint a picture for you. If you look in your journal, if you do journal your trades, and I hope you do, if you look in your journal and you have 3, 4, 5 trades on the same currency pair, listen to me. In one day, you have 3, 4, 5, 10 trades on the same currency pair, all 1 hour apart, less than an hour apart. And you see buy, sell, buy, sell, buy, sell, 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 buy, sell. You know what is happening. You are not analyzing that, You are actively revenge trading because there's no way you could analyze the same currency pair in a day. And this is something I generally believe. There's no way, unless you're scalping. And let's be real, majority of us are not scalpers in this sense. Listen to what I'm saying. There's no way that you can have an analysis, right, on, let's just say your AUD NZD, right? You have an analysis on AUD NZD thinking that it is going to sell. And then not even 1 hour later, you lost that seller. Not even 1 hour later, not even half hour, 15 minutes later, all of a sudden you're buying. That is guessing, according to Alan. That is exactly what it is. You are guessing. You are guessing. So what is happening now is you're not approaching this from the perspective of a trader, You're not approaching this thing from the perspective of somebody who's a data analyst. You're approaching this from the perspective of I lost and I need to make back my money now. You understand? You know that ad, it's my money and I need it now. That's how you're approaching it. I don't even know what else. I think that's JG Wentworth, right? Right. Yeah, that's how you're approaching it. And the problem with that thinking is that is not going to last. You're not going to be able to survive in the long term doing that. Let me explain something to you while I taking requests for some pairs to analyze. So y'all could start to request some pairs to analyze now if you want me to take a look at something. All right. But let me explain something to you, right? Any funded trader program, any prop firm challenge or whatever, they don't care if you can pass a challenge and pass the evaluation and the verification, They don't care about that, What they care about is that you could trade well consistently. That is what they care about. They don't care that you could pass a challenge. They don't care that you could pass the evaluation in a day and 2 days and 3 days. They don't care about that. Because what they want is to be able to say that this trader is showing signs of being a good, consistent, profitable trader. Sometimes he's going to lose, and that is normal. Sometimes he's going to win, which is also normal, right? But overall, this trader has demonstrated good trading habits. And the interesting thing about that is once the trader is demonstrating that, that is what a model prop firm trader looks like. Not somebody who could pass the challenge in 2 days, and this is why when you see and you're going groups and you see people saying, pay me and I'll pass the challenge for you. Yeah, they'll pass the challenge for you, but you're gonna lose that account. You are going to lose that account because if you couldn't pass the challenge for yourself, what makes you think that you're going to be able to take that funded program and actually make good, consistent returns from it? You're not. Stop fooling yourselves. What it is you want is good, consistent returns from a perspective of analysis coupled with an entry. That is what you want. And if you cannot do that, that is why you're going to be failing these challenges one after the next. What I tend to tell students who I am teaching and guiding, trying to coax towards doing that funded trader challenges, if you cannot pass on FTMO specifically, if you cannot pass that FTMO challenge 3 to 6 times in a row, don't even waste your time to pay for that challenge because you're not ready. That is what they want. They want to be able to see you pass challenge after challenge after challenge consistently. If you can't do that, don't even waste your time. Don't even waste your time. You're wasting your money. You're paying for challenge after challenge after challenge. Do what you're doing. Amen? Everybody agree, or does anybody disagree with that? Does anybody disagree with what I am saying tonight or this morning or whatever time it is by you? What do you guys think? You see, I'm approaching it from such a deep psychological perspective. You realize we didn't talk about charts yet, but these are things a lot of teachers will not talk about because they think that the only way to be successful in this industry is to have a good strategy. And that is nothing further from the truth. In fact, it is so far from the truth that is why people complain. You understand? That is why students complain. I don't know why the strategy ain't working, why it ain't working, because they believe that it is about the strategy, but it is not. Many students have proven, many people, many of you could say that you could take 1 or 2 good trades a month. But the problem is you're so caught up in thinking that it's about the strategy, always having to win, and not studying everything else. When you do lose, you think that it is the strategy failing you, and in actuality, it is actually your own perception and your own psychology that is destroying you. Henry Okafor asks, are you saying we should pass challenges 6 times before we start making profits? 3 to 6 times. FTMO's free trial is about 2 weeks. If you cannot forfeit making money now and actually learning how to do it over, I would say 2 weeks, that's 12 weeks, which is 3 months. If you can't take 3 months, all right, to really try to understand what it is you're doing and do it consistently, you are going to lose money. I'm not asking you, I'm telling you. You are going to lose money, right? And if you don't believe me, go and pay for the challenge now if it is you're not ready. Now, here's the thing. If you can pass a challenge 3 times in a row, you have a good chance. But if you pass in one challenge now, or the free challenge, and then you take the next one and you lose, you're not ready. You're not ready. You understand? You're not ready. I saw someone challenge you to trade on Instagram today. Did you ever respond to that guy? challenge me to trade. No, but all right. Well, I guess I will. Um, I have no problem in trying to do a trade-off. But again, here's the interesting thing. Maybe what is it that they want to out trade me or something? If they do, then you know something, maybe they will. Because like I always say, it doesn't matter who knows and who doesn't know. Sometimes I will be wrong and sometimes I'll be right. You understand? That's just the nature of the game. I don't know if I'll ever be right. I don't know if I'll ever be wrong. And I'm okay with that. All right? Maybe they will. Maybe they will be a better trader than me. All right? I saw someone challenge you to, all right, so we did that. Okay, this means I need 4 extra challenges. Yes, if you've passed 2 already, try to pass 1 more. If you can pass 1 more, I think you have a good shot. Right? Have you passed any funding accounts? I have done the challenge just to prove that I could do it. And yeah, but I don't need any funding or anything like that. Right? Good. So I have seen that we have called out a few things that we want to look at: AJ, GA, and NZD CAD. So we'll start with AG. Good. So A Rod asks to look at AG. So we'll take a look at that. Now, last week we did an analysis on AG, and actually it wasn't badly off, if I'm being honest, because you can see this is what we had. I didn't move the drawing or did anything. I did say that I would have liked it to come up to this area because of what we had. It did not necessarily do that. It didn't go all the way up to the area, but it was definitely biased, as I would have outlined in terms of my analysis. I also said that this is a potential liquidity grab because there's liquidity both above and below this area. The reason for my thinking that there's liquidity below this area, I always say this: think about it logically. If a market is going to move in one direction, it needs to gather liquidity from the other direction first. Why? If the market is buying, it means that if majority of traders are buying, it means that somebody has to be there to sell to the buyers. It's simple. So that being said, it is going to, it's most times, it's, I don't want to say force, but most times the market is going to try to go in that sell direction to grab that liquidity of the sellers and then go in the buy direction. That's just the way I try to visualize it. That's just the way I try to look at it. And because of that, that's how I produce my analysis. Basically from the perspective of not only traps, but liquidity, right? So that's AG. Right now on AG, I am not 100% sure about what is going on. And I'll tell you something as well. Don't ever be afraid to say that. Don't ever be afraid to say that you're not sure about what is going on. Don't ever be afraid to say that, you don't quite understand what you're looking at, because sometimes that's going to happen. What am I looking at right now on AG? I'm seeing accumulation. I'm seeing something that looks like a W, a double bottom, but it's not necessarily a bear market. So why would it have a W? Why would it have a W pattern or a double bottom? A double bottom is a bullish reversal pattern, but the market is already bullish. So why would it try to reverse into a bullish move if it is already going bullish? So at present, I'm not 100% sure about what I'm seeing on AJ. It could be two things. It could be that it is actually going to continue bullish, or it could be that this is something along the lines of head and shoulders, which is where we would have something like this and this and this and then that. I don't know. And because I'm not clear about it, I'm going to say something that I tell my students all the time, which is LIA. Anybody who knows me knows what LIA means. Let me see who knows me. What does LIA mean? LIA. What does it mean? If you all know what that means, put it in the chat now, quickly. It's something that teaches excruciating discipline. LIA. What does that mean? Quickly. Leave it alone. Very good. A good rule of thumb is anytime you're trying to take a trade and you're not 100% sure about even your bias or your analysis, if you're not sure, leave it alone. You see, a lot of the time we as traders, we try to force setups that aren't necessarily there. And you know what happens? You lose the trade and you have no idea why. Because you're trying to force something. You're trying to force an opportunity that was never an opportunity to begin with. You understand? So that's just the nature of it. So for me, I would leave AJ alone for now. She is Bree Wayne. Wait, he sounds Jamaican. No, I am from Trinidad and Tobago. I am Caribbean, yes, but I'm not Jamaican, right? Good. So we will go to the next one, which is GA. Right. So we have another nice one here again. GA. Right. So GA, let's look at the overall direction for GA. GA overall, at least from the last 2 years, GA has been bearish. It is somewhat ranging, and I don't necessarily like the range that I'm seeing on GA presently, but it's definitely over the last year, or most of this year, has been bearish. It's somewhat in a range presently as well, and I don't like that either. If I am So this is somewhat of a break and retest, but I don't like that because this here is a bull move. So what I'm really trying to do here now is I'm trying to align things, right? So think about it logically. If a market is going up, right? If a market is going down, GA presently is going down, right? It's bearish. It's a bear market now. All right. GA, it's a bear market, right? Cool. So if it's going down overall, unless it shows you a sign that it is going to reverse, listen to what I'm saying. Unless it shows you a sign, right, that it is going to reverse, should you try to buy it? What do you all think? Think logically. If it is going down, it's a overall bear market, right? If it is not showing you a sign that it is going to reverse and go up, should you buy it? No. So the thing is, overall it's bearish, but if you look on the 50-minute time frame, it's actually somewhat bullish. So because of this, I would disregard this. I would not really trust this on GE, because how do I know when it's going to stop being bullish? How do I know? I don't. So I'm not going to trust that. Right? Good. Right? Good. So the next one is NZD card. Looks good for setup. Let's see. So that's Diego, NZD card. All right. Okay, good. So NZD card is bearish currently, right? So this is 50-minute time frame. It's currently bearish. Let's see overall. NZD card is bearish. Yeah. Right. So this actually looks kind of good. I agree. Why do I think so? Because remember we said that if it is overall and currently bearish, that's a good sign. You'll never make more money than when the market is already doing what you wanted it to do. So this here could be an impulse move. What do I mean by impulse move? What my thinking of an impulse move is, this is to gather the liquidity. Remember we said that before the market actually goes in the direction that it wants to go, it should go in the opposite direction to grab that liquidity and then go. So if this is a bear market, before it actually sells really aggressive, it should buy, because obviously the sellers have to sell to somebody, right? So it should buy. They have to go grab the liquidity of the buyers, right? And then drop. So overall, NZD card is bearish, right? It has gone for some liquidity and is now going back bearish again. So if we come down to the 50-minute time frame now, this is actually a good sign. It is bearish currently. So you could begin to try to prioritize looking for an opportunity to enter. Now, here's the little trick with this, right? This here obviously is Asian session, but we're in Asia now. What I want is I want to see that grab of liquidity even in the Asian session. So what I would like to see is something maybe that looks like this and then that. And why right here? Why am I drawing it like this? Because this is the last area I know liquidity to be. Maybe something like this. That is the last area I know liquidity to be. This area. If I see something like that, I would probably try to sell NZD card. So that's what I think on NZD card, right? So that is that, right? I could be wrong. We did GE already. GG. Let's deal with that, right? We did GE already. So GJ, all right. We have a nice one on GJ. Good. So GJ currently is bullish. Let's see what it does overall. It's also bullish overall. That's clear. Anybody disagrees that GJ is bullish? Good. No. So it's bullish overall. And you're seeing some nice rejection, some nice spikes to the low, and then it pushes up immediately after the fact. For our time frame, also nice and bullish. You even have a nice bullish engulfing candle coming in here on the 4-hour. So if it closes like that in an hour and 25 minutes, that's a good sign. That means that there is possible move to the upside, which is good, right? 15-minute time frame, that's also very strong. What I would like to see, even though you're seeing some rejections to the downside, what I would like to see, go for some liquidity and then up. Why here? Maybe not like that. Let me draw that again. Let me do it a little better for you. So what I would look to the left, right? And you're not looking to the left for any support or anything like that, you know. You're just looking at an area where you know that there will be a massive amount of traders. I would like to see grab some liquidity and then go. That's what I would like. That's what I would like. That's GG, right? So GG, we did that. All right. Same thing. You think, you know, yeah, like your accent or thank you. Yeah, that's a Trinity accent. Trini, you that right? Very good, right? Very good. All right. So yes, I am from Trinidad. All right, good. All right. Ever since I started ICT, I'm looking at the market differently. Hope everyone here becomes real. I agree, bro. I agree. CPI incoming. Good. Right. So that's GG. So what? Since anybody have anything else you want me to take a look at before we move on? I want to take a look at gold. I did this in my analysis yesterday morning, I think. Yeah, yesterday morning. So this is just ignore how messy it is. I'm not deleting these. I usually tend to clean up my charts, but I'm leaving them on specifically for this lesson, right? So this is what I had last week, and it more or less did what I wanted it to do, right? In terms of accumulate, spike up, drop back down, look the same thing here again, create the M, trend line, everything. More or less what I wanted to see is what would have happened, right? I am waiting. I waited to see if it could spike up into this area, right? Break this trend, spike up into this area, capture some of this liquidity from this area, this big general area right here, spike up, grab that liquidity, and then drop. What I told listeners who were listening to my class yesterday morning is I am looking for sells on gold, right? Why? Listen to me. Daily time frame. What is gold? From since this area, which is March this year, gold has been a bear market. This excuse me, this here is an impulse move, meaning this buy is a buy to capture liquidity. Why do I think so? Because it bought right into the area where majority of the traders would have been trading. That is where the liquidity is. If it has to sell, it has to go for the buy liquidity first. It also would have broken out of this little micro trend here, broken out and starting to drop. You have a bearish engulfing on the daily time frame. Everything more or less aligns, right? What I would do, I'm not in sales yet, but what I would do is when it spikes again, I would have tried this, but when it spikes again, right? And I would probably look for a spike maybe in this region here. When it spikes again, maybe something like this and then this. In this area here is where I would be prioritizing looking for that sell on gold, because I know at this point, let me just, I know I always get tied up with saying I know. I believe at this point in time, if it goes up for the liquidity and then drops really aggressive, if I can get an entry in here when the momentum aligns with the bigger picture, which is overall bearish, it's a lot easier, or I should say simpler, for me to get a zero drawdown entry or a lesser drawdown entry. You all have to remember I use extremely tight stops. So I can't get away with just entering any and everywhere and hoping for the best. You have to be precise. But where does that precision come from? You have to think about what is the logic behind the market. If there are sellers playing in the market, obviously we know that they have to grab some of the liquidity from the buy side in order to continue selling. That's basic common sense, right? So that's what I'm thinking. Right? 1760. Yeah, I think so. I think 1760. I agree, right? Somewhere below this area because we know that there's liquidity here. So I definitely agree. What I would not do is just randomly sell it, because you don't do it's not an analysis. So this is what I'm looking to see, where I see it spike up, whether it be in Asian or New York or whatever. I would prefer it to be in Asian so I could get in and go and sleep, but it is what it is, right? But I would like to see it grab some liquidity and then drop. All right. All right. UJ, let's look at UJ quickly. UJ, right? So UJ is overall bullish, and we know this. UJ is overall bullish, as clear as day, right? This move down that I did not trade this, by the way. This is just a simulation. I did not trade this. Excuse me. For Oh, for UJ, this here is now showing signs that it is going back bullish. So if it can grab some liquidity from the downside, from the bears, and I am thinking that if it can grab some liquidity from maybe this region, maybe something like this, and then go, that would be good. And furthermore, we know that there's liquidity in, around, and above this area. Why do we know that? Because this has been an area that has been respected in the past. Meaning there are people selling. All here is people selling. And how do you know that? Because the market sell. Simple. So basically what I'm thinking is if you can get this liquidity grab here and then it goes back into bull momentum again, regardless of the session, in this region, once it starts to move back into bull momentum, that's where I would probably try to buy it. Right? That's what I'm thinking. So that's UJ. GU, let's take a look at that. GU, I think, is in an interesting place right now by virtue of GU is on. I remember this. GU was on a big, in a big kind of consolidation range here, right? And it's on a support. What do traders think that this is? This is an area to buy GU. But if we look at GU overall, GU has been bearish, correct? GU has been bearish since May of this year, and it has been even more bearish since July last year. Not last year, 2014, sorry, right? So that's a big bear market for GU. So I think if GU can continue in a bear direction, would be good. There's liquidity below this area. Why do we know this? Because there are people buying, which means they probably have stop losses below this area. There'll probably be people buying down here as well, which means there's stop losses below, which means there's liquidity. So if it has to sell, it should go for some liquidity and then sell. But if we look at GU now, I would say that it's actually started to go for liquidity already. Off of this area, it goes up. So if I am seeing a sharp move down, maybe something like this, and then a sharp move down, I think this is not an M pattern, by the way. I think this is actually a strong sign. I would not trade it, at least not yet, but it's a strong sign. That's what I'm thinking on GU, and that's what I have. XTI USD, which is crude oil. All right, so let's look at that. XTI USD. Where's that? XTI. I don't have that. No, wait. I thought I had that. Oil. All right, there we go. Right, oil. So look at what I had. Right, y'all remember? I think I had the same thing. This is so ironic, because it's the same thing on GU. If you compare this with GU, it's the same thing. Right now, oil is bearish, at least from this area. Now, overall, it's bullish. I agree. But from this area, which is June of this year, it has been a bear market ever since, right? And I don't know if I would consider this a reversal, this area here, but it's definitely bearish from this point. This is quite a bit of bear momentum. Now, if we look on the 50-minute time frame, I would have said that it would have broken this area, accumulated a little bit, and then dropped. It actually broke the area, accumulated a little bit, and then went back up again. What I would like to see, obviously, is in this area, obviously, you get the momentum in alignment with what you want, which is sells, and then you're good to go, right? So in a case like this, it's actually looking more like it's happening here, which is where it is in momentum. It comes back for liquidity up to this last area here, and then it drops. It's not presently got this liquidity yet, so I think that there's still potential to come up to this area. So I would be careful to sell it just yet, but I do believe oil is still going to continue to sell. That's what I'm thinking. So I'll remove this because this was definitely incorrect, and that's fine. All right, oil. BTC, interesting. Let's take a look at that. FVG. What is FVG? Why does that sound so familiar? FVG. Favorite. Very good. I don't know what that is. FVG. What? That sounds very familiar, but I don't know what it is. Right? BTC. Let's take a look at that. I think I'm trying to remember what I said about BTC. What did I say? Oh, there we go. Right. So let's zoom out a little bit. Right, 1 hour. Right. And I said that I would like to see a push up, maybe to this last area here, and then a big drop. It's not currently done that as of yet. I still think that is possible. As for now, I would leave BTC alone. right? It's not definitely going back in bear momentum, so I'd be very careful to try to sell it. Fair value gap. That's what it was. I remember I heard it somewhere, right? And I don't use it, but if that's what you use and that's what's working, then by all means, right? CADJPY. Let's take a look at that. Do I have any setups for the day? I'm actually not seeing anything presenting itself for the day as of yet. Okay, so you can see CADJPY also somewhat did what I wanted it to do, which would be here where it would drop and then climb, but then it just dropped to shit. It is what it is. This is in the same boat as AJ. I'm not quite sure about this, so I would leave this alone. LIA, right? I'm honestly not quite sure what it's trying to show me at this point. I would ask the relevant questions by virtue of what is it doing, and as of present, it's not bullish or bearish. It's actually somewhat ranging at this area, so I'll be very careful about this one, right? UCAD Pablo. All right, so UCAD, let's take a look at that. Okay, so UCAD, I know UCAD overall is bullish, right? From this area, I know it has been bullish since May of last year, and it has been even bullish even before that, right? UCAD at present, however, is bearish. So I don't like this. What I would definitely wait for is for it to spike down and then maybe go back up, grab some liquidity to the sell side, and then climb. But as of right now, I don't really like UCAD for anything too particular. All right. Yeah, anything else you want me to take a look at? Yeah, what do you guys think? Listen, I'll tell you something as well. One thing I prided myself on in all my years of trading is I don't proclaim to know it all. I could be absolutely wrong about everything I've said thus far. Everything from the start of this class to now, right? But I'll tell you this: it in the years that I've been doing this, I haven't been proven wrong very, very often, but I have been proven wrong, right? And it is what it is. You see, once you get in alignment with being okay with that, you would throw away this concept and this belief that you have to be a perfect trader. You have to be the best at all times. I've realized that people tend to respect you even more when you admit that you are wrong. You see, when you could admit that you were wrong about something, people tend to respect you, especially this is one of the laws of power. Be honest when people expect you to be dishonest. Tell the truth. I was wrong. I got it wrong. I didn't do, I did that with NFP. I got it wrong. I will tell you the truth. I got it wrong. You understand? But if you know my history on analyzing NFP, you would know that 2 months back, I had a 17-0 win streak. You understand? If you know my history, you'd know that when I say something gonna happen on NFP based on my analysis, you know that I mean what I say. It most likely gonna do that, and not because I know that is what's gonna happen, but it is because my analysis, I'm trying to make sense out of what I'm seeing. You understand? And I have found that people tend to respect me a lot more because of that, right? Carry that into your own trading. Be okay with not getting it right all the time. Once you do that, you lose this constant desire to always get it right and have to revenge trade. Revenge trading comes from the desire to always be right. But if it is, you know that you're not always going to be right. You accept the fact that sometimes you're going to lose. You know what happens? Beautiful things happen because now you are okay with being not okay. You ever hear that expectation is the root cause of all disappointment? I never expect anything from the market. I might be wrong. That way, because I am not expecting to be right, it's not going to hurt if I'm wrong. You understand? Risk is managed, stop loss is set, it is what it is. Carry that into your own trading, and you'll be surprised as to how much calmer you are as a trader. Right? EU, let's take a look at that. I love EU. Right? Let me ask you guys a question. What is your favorite pair to trade? Right? So EU just created this M pattern. Oh, actually, this is beautiful. Wow. How did I not notice this? Wow. So EU actually kind of did what I wanted it to do, which is grab some liquidity and then drop. But actually, EU tried to produce a M pattern and it did reverse against the trend. So actually, this is one of those scenarios where I was right. Now, EU overall is bearish, right? EU overall is bearish, so this is good. This bull move is an impulse move, which is good. It's actually bearish again, which is good. If I could see EU grab some of this liquidity here, and it actually did. So if I see EU at this point just start to go bearish from here, you know something? Sells on EU. That's what I'm thinking. Sells on EU, right? S&P 500. I don't trade that. I don't trade the S&P 500. Do I? No, I don't. Right? So this is bullish here, but and it's bullish here. So this actually is a strong case for buys. It's grabbed the liquidity, so it's actually maybe even a stronger case for buys. If it goes back aggressive in the bull momentum, I say take your buys. Right? So let's talk about some people's favorite pairs to trade. NAS 100, S&P 500, US 30, GG. Right? So yeah. My favorite pair to trade, believe it or not, is AUD USD. Right? AUD USD. That's my favorite pair to trade. And the reason simply is because AUD USD is a very docile pair, but it does move. It's a very simple pair to understand. Right? It moves, I don't want to say just as much as EU, but it moves, and it's a simple pair to understand. It's not an aggressive pair where, every trade you take, you're at risk of being stopped out immediately. As a pair that does that? Euro NZD. Anybody who knows me knows I hate Euro NZD. I hate it, right? And as you progress as a trader, you will soon get to realize certain currency pairs just don't resonate with your style of trading. Some people tend to love Euro NZD. I hate it. With my style of trading, a 10 pip stop loss is excruciatingly hard to trade. I could count on one hand, I always say this, on one hand, how many good profitable trades I've caught on Euro NZD, right? And because of that exact fact, I tend to not trade it at all. I might analyze it and tell you what I think it's going to do, but I wouldn't actively go and pursue a trade on Euro NZD. Think about it, what just a 10 pip stop loss on Euro NZD. Let's just say I wanted to sell, right? Oh, you know what? Let's just say I wanted to buy, right? A 10 pip stop loss on your NZD. Watch what it looks like. This is US 30. This is what US 30. Look at that. That is ridiculous. You understand? I don't like that. I like the fact that if I take the trade, there's a little buffer room that I could afford to be, to not be absolutely precise. Because let's be real, you will not be 100% precise every single time. You understand? So, right. So that's good. How many pairs do you trade? I trade all of the majors and minors, minus your NZD, right? I trade US 30. I trade gold. I trade Bitcoin if listen to me, if the setup is exactly what I want to see. But right now, I'm not seeing anything clear on Bitcoin. But all of the majors minus your NZD, all of the minors minus your NZD, all of the majors, gold, and a few other little niche ones, right? Like a very few, right? So I might trade Ethereum if it is I see something interesting, that kind of stuff. But other than that, mostly just the majors and the minors, right? GJ and UG are my favorites. That's good. Those are beautiful pairs. Yeah. Guys, do we have any questions before we close off? Very, very fun session tonight. I really hope that you okay, Andy has a question. Why do you trade a lot of pairs? Good question. So somebody said recently that they only trade one pair. And I understand. And you trade one pair, you're most likely going to be extremely proficient in that one pair, right? Now, I am what you would consider an opportunist, meaning I prefer to find opportunities that are presented to me rather than I go and look for them. I'll tell you, when you trade only one pair, you're doing the exact opposite, right? You can wait weeks, sometimes maybe even months before you find the optimal setup on one pair, right? But if I'm trading multiple pairs, I have multiple opportunities that might present themselves throughout the course of a week. So that way, I don't need to go and force a setup when it actually presents itself to me. You understand? That's just how I look at it, right? Now, I could focus on only Euro USD or only US 30 or only gold. But here's the thing. Gold is not going to present an opportunity every single day. Sometimes it's not going to present an opportunity for an entire week, right? And to appease my mind, because again, I am just a normal human being and I'm not perfect. to appease my mind and to stop me from trying to go and force a trade, because sometimes I'll get weak. It happens, right? Again, just being a human being, that's just the nature of being a human being, right? I might get weak and I might say, you know what, I ain't take nothing for the whole week and I need some money or this or that or the other. And you know something? You're going to force a trade on gold when it was never a trade to begin with. You forced an opportunity. You didn't even analyze it, you know. You did the same thing that I've been speaking about. And I have done this in the past. But what I have realized is if I'm looking at all of the pairs, I tend to be a lot calmer because I'm not forcing anything. If an opportunity presents itself and I am able to analyze it, then guess what? Once the analysis looks good and I am given my opportunity to enter, that's when I'll enter. But you can't do that when you're only trading one pair and it gives you one opportunity once a week or once every 2 weeks or 3 weeks or a month. So that's why I trade so many different pairs. It's not that I'm trading all of them at once. It's not like I open in sells on all the Japanese yen pairs at the same time every single day. That's not what I'm doing at all. I'm waiting. I am waiting, and I will wait and wait and wait and wait until I get my setup. That is what you need to do as a trader. I hope that makes sense. Any questions? Any other questions before we close off? We're nearing the 1 hour mark. Any questions? Anybody doesn't understand? Anybody doesn't agree? Anybody feels like they need better clarification on anything? Yeah, what do you guys think? Everyone good? Looks so. So, my friends, if that is the case, I think I'm going to close off this session now. I hope that you have a great rest of your week, a safe, profitable, and consistent, active word, consistent trading week. I hope that you are able to do the things that you want to do. You're able to profit. You're able to do this on a consistent basis. If you are going to be taking any trades this week or for the rest of this month, please practice proper stop loss placement and proper risk management. Have a great rest of your week, guys, and I will see you all in the next one. Peace out, guys.